So glad you could join us here on a Monday. It's a full trading week once again, and as I mentioned Friday when we left you, there was the potential to have a somewhat explosive trade here on a Monday, given whatever the weather direction took over the weekend on the new weather models. Well, indeed, we did have a firmer trade overnight. In fact, some would call it sharply higher overnight, at least for a while. And then kind of backed off here as we got toward the morning hours, but it was still significantly higher all across the grain trading floor. Here to talk about it, let's bring in Rich Nelson of Allendale Incorporated in McHenry, Illinois. And Rich, thank you for joining us to kick off the week here. A lot of stuff at play here today, and it seems like the vast majority of it is going to be weather-based, huh?
I think that's exactly right. We can talk about the potential bearish impact for Wednesday's USDA report, that monthly supply demand, but certainly that pales into comparison with the potential changes in production lined up with weather that you're mentioning here, and especially as we go into the key phase of pollination, determining number of kernels on each ear there.
I know in my radio show this morning on Commodity Wrap, that's of course on Sirius XM, channel 147, that comes on at 8:30 Eastern time, and we were talking about the fact that one of my analysts was from central Illinois, and he said they were getting a heavy rain shower this morning. And looking forward, we were joking, half joking, about the fact that he could probably look out his east window this week and see tremendous crop conditions, and look out the west window and probably see crop stress, the way that jet stream is dividing the Corn Belt in half there.
I think that's the exact case right now. In fact, for most of us on the analyst side, we probably will plug in maybe trend yields for eastern Corn Belt. The question for us is obviously how much to take off as far as the key problems with western Corn Belt. Whether you're going to write off maybe 15% yields, maybe a 12% yield cut for the western Corn Belt, certainly a big question for us, and whether this means we're talking 162 or 166 for a nationwide yield estimate. A lot of questions, but certainly damage is the main issue for right now.
So let's see what happened in the Globex trade here, and where we're kind of wrapping up in the overnight trade to get ready for the daytime session. Yep, we did have a firmer tone, that's for sure. We had September corn 6 3/4 higher at $3.99 1/4. It did get as high as $4.01 overnight on September. And December closed, well, didn't close, but it had a last trade of $4.12 1/4. That was up 7.5 cents. If you look at soybeans overnight, here we had the August contract 19.5 higher at 10.20 1/2. November up 19 1/4. On the wheat trade, well, we had a higher tone in Chicago. Look at this, September 14 higher at 5.49. In Kansas City on the September contract, we had it trading 12.5 higher at 5.55 1/2. And then everybody wants to know what Minneapolis is doing. That's the big dog this week. September was 33 1/4 higher at 7.97 1/2, and I guess that actually was on the high of the overnight trade on that last tick there. Kind of an indication of what to expect on the open here this morning, I guess.
I think that's the case here. So certainly we're going to start off higher right off those last prices for the overnight session. As far as other issues, crop progress this afternoon might give us a small boost. That one may show maybe a 1% decline. As you talked about here just a second ago, we're not going to see major declines on these crop conditions, mainly because the problems in the west will be slightly balanced by the good stuff in the east side of here.
Yeah, if you look at the national numbers. Rich, if I could I get you to review what our limits are in the wheat trade? Some folks are a little confused about that. Isn't it 30 cents in Chicago and Kansas City and actually 60 in Minneapolis? Is that right?
That's exactly right. Yes, sir.
It is. Okay, so they can make some really big moves in that Minneapolis market, and it may look unusual. The others can't run and play that far, but Minneapolis does have a little more of a free reign there, so wanted to point that out. All right, Rich, if you don't mind, I'll hold you over here for a moment, and we'll talk about the potential opening trades here in our livestock trade. Rich Nelson is our guest. We'll be back in a moment. Back with you, and we're talking with Rich Nelson. He is with Allendale Incorporated in McHenry, Illinois, a well-known market expert. It's a pleasure to talk with Rich each and every morning here on the program, get his thoughts about the markets. I want to turn our attention now to the livestock trade. And Rich, let's take a look at this livestock summary as we left Friday afternoon. Here's kind of a recap of what took place on Friday. Now, what we had was very limited trade in Kansas on a live basis for the cattle. They were bringing about 118.50, but it was basically only 1 or 2 truckloads, the way it seemed, hardly enough for a market test. But it was a little bit firmer than what we had seen in the previous days. So that would be maybe steady to up a couple of bucks. Now, if you look at the dress basis sales, looks like the range ran 187 to 190 in Iowa on a few truckloads there, and it looks like in Nebraska, we had about 5,200 head that sold in Nebraska, 188 to 190 to wrap up the week. And I guess you'd have to call that up about $2, wouldn't you?
I think so. I think that 186 was the most active trade as far as the previous discussion. So on the main point, yes, rebounding prices here as the week went on. Good to see there. I don't know if we're going to get much of a change as far as the futures end here today, especially that wholesale beef continued to have some problems here last week. So a lot of arguments going on right now, but it looks like Packers will hold on to this amazing margin and maybe hold cash prices, maybe steady this week, maybe still $1 lower when it's all said and done.
So here you have the beef cutouts, $1.21 lower Friday afternoon. They were priced at $218.84, and then you had the select cuts also getting pounded again. Friday afternoon they were priced $1.25 lower at $202.51. Not a lot of change in that spread there. It just widened out by about 4 cents or so. But on the other hand, if you look at the pork carcass cutout values that were posted Friday afternoon from USDA, man, all the primal cuts, basically, the major ones, all went the other direction. So we had carcass values up $1.12 on Friday afternoon. They were priced at $104.96. The loin market was up over $1.50. Hams were up 85 cents. And then you had the bellies up $5.73 again on Friday. So we had a little backing and filling in the futures trade, but boy, that wholesale trade just continues to chug along.
And that's actually a great discussion point right there. Massive gains as far as this pork market here in recent days. One thing to look at here is, as far as this pork issue is we're now turning the corner with supply. The seasonal tightest supply of the year is now behind us. And with some full kill weeks, we should see some numbers start to build back up. How quickly this breaks the cash pork market, if it does, is going to be a very big question. So maybe this week will be a very good test for us on the wholesale pork side.
So let's take a look at the long-term prospects here. When you look at the highs and where the lean hogs have been and compare that to where we are right now, what are the odds that we're going to go back and retest those highs yet again?
You know, on this one, I'm not quite sure. I think you could probably have maybe another week left of exciting stuff lined up for this market here. Regarding the big picture issues, though, like I said, in my opinion, it's still days away as far as how long this market can hold up at these higher price levels. So good to see this market. I still think there's just a little bit more here these next few days. Beyond that point, though, I just don't want to bet higher on prices right now.
And are the feeder cattle still watching this corn trade very closely? I mean, if we would tend to have an explosive move this week in the corn, would that really pressure the feeders?
I think it's something which could have an impact for us. I don't know if it's going to be the major driver for us, but it could be certainly a background influence. There's no doubt that I think a lot of this trade is still even maybe a little too conservative on how aggressive that this corn market could change in the coming days here.
All right, and of course, all eyes will be on the big crop production and supply and demand reports coming out Wednesday as well. It could impact not only the grain trade, but the livestock as well. Rich, great to talk with you. Good stuff. Appreciate it very much.
Great. Thank you now.
All right, have a great day. Rich Nelson of Allendale, Incorporated in McHenry, Illinois. A lot of, as we were saying during the break, a lot of black powder being crammed into the cannon here this morning, waiting for the open.
We'll just have to wait for that boom.
Could be an exciting week.
Okay, thank you so much, Markets Editor Marlon Bowling.